So, hello. How's everybody doing? Hope everybody's having a great day. 30th of November, 2016. No trade calls, no recommendations. Everybody responds for their own stuff. We're here for educational purpose only. Third update of the day. So, thank you for spending some time with 50 here, just trying to pay it forward. So, the plan for today is we're going to do this is our third session. We'll do, 30 minutes or so. We don't want to run too long. If not, it takes ages to upload them on YouTube. And then the plan is we'll do another session into the OPEC deal or London close, something like that. And then we'll try and do another one into or just after or into New York close. Okay, so we'll try and bring the total to 3, 4, 5 updates, something like that. If something really interesting happens, I'm happy to do more. As I said, hey Karen, how's it going? Dedicated the day to you guys. So again, got to manage some trading here and there. So we'll try and do as many as we can. So if anybody has any comments, any questions, anything they want to discuss, shoot. If not, I'll go through what I think are the most interesting things on the radar today. Okay, so let's keep in mind, I'm just going to talk you through kind of like we would on the weekly sessions, because we're not having one today, so we're just going to try and be in here as much as we can. Okay, so what's happening? So we still have some data points coming. Of course, the main event risk for the day is the OPEC meeting, right? So a lot of wheeling and dealing with the circus acts on the wire. We still have the Chicago PMIs. We have pending home sales. We still have crude oil inventories, and we do have Weidman speaking. We do have Powell speaking. So again, there could be an awful lot of wheeling and dealing, right, going on. I mean, the most important thing after we get through today is going to be we've got those PMIs out of China tomorrow, but really, and all the PMIs out. But the focus is going to quickly turn to non-farm payrolls. So we'll have to see what happens there. So here into today, what we were talking about from this morning, one of the most interesting charts out there for us was still looking for some kind of upside rotation on euro, even though we discussed the fact that most things were still stuck inside previous day range, right? So if you look at this here, the market's still probing. Aussie pretty much inside previous day range, euro pretty much inside previous day range, yen pretty much inside previous day range, CHF pretty much into previous day range, cable inside previous day range, gold inside previous day range, ES pretty much inside previous day range. Does that make sense? Okay, so the two things we're particularly interested in is, are we going to get this correction on the dollar, and how our equity is going to react. I think here one of the nice things which we discuss is still the NASDAQ, right? And we're still favoring the short side on the NASDAQ. Here you see that yesterday we pressed up into these highs, right? And we're holding back below on this last ramp up here. So this is particularly interesting for us. So a lot of tight players will still be already getting short here, right? With tight stops above this zone, right? And basically the expectation would be that as long as yesterday's highs hold from a day close perspective, we've put in a short-term top here, and we'd start to see some kind of a reversal here. That's probably the most aggressive trade coming into the day, okay? And what we would focus on at the very least, right, at the very least would be to see a move back down to clip some of those levels. Now, what's the trickier thing is if you look at a bigger picture, this is really the structural resistance that's being defended, right? So that daily close after we printed new highs, right? And that was the beginning of that big move down into election, et cetera, et cetera. That was the real. So here, if you're playing tight off this range, you have to understand that you're playing a lower odds setup, or you're playing tighter, but you could still be right and get taken out on the setup. So it's a tricky one, but that's the play if you want to be tight. So what I'm going to do is I'm just going to extend this line here. Actually, let's do it. Let's put a proper line on here. So we've got it on the we've got it here on the chart. Flip back to the to the daily, and let's get rid of these period separators. So I think this is probably here the most interesting dynamics on the day. So let's see if we get some traction. Clearly, if we start to press above those highs, market is going to be tempted to take that first level of resistance out, and then you've got the much bigger, more important level, which is further up, right? The other thing here to keep in mind in terms of expectation of what to look for on the day. So does it make sense that, as always, we talk about, when you're coming into these morning sessions, you have to put yourself in a position to succeed. You have to give yourself some kind of context for the day, right? Having unrealistic expectations about what you're trying to achieve in terms of P&L, but also unrealistic expectations in terms of daily range, weekly range, monthly range, whatever, is also a recipe to make things harder than they should be, right? So coming into the office here as we approach 9 a.m. New York, 30 minutes, 38 minutes from the cash open. If you're coming into the office now looking for everything to move hard, quick, pronto, right? Let's put a trade on. Does it make sense that you're going to set yourself up to be disappointed? Now, I'm not going to make any jokes about first dates or stuff like that, but because chances are, right, you're not going to get that aggressive action. Why? Because the broader context is there's an awful lot of event risk with that OPEC meeting, right? And we still have data points coming out today, right? We still got the Chicago PMI. We still got the pending home sales. So all things being equal, if stuff is going to move, and if it's going to move hard, there's a better chance that it will move hard or start to move and get traction later on in the day. Okay? That's really important, especially if you're a newer trader, is because a lot of people just have unrealistic expectations about what is likely to happen and when those things are likely to happen. So another example of that today is you don't want to come into the office early in the day, all guns firing, all guns blazing, shooting out all over the place. You want to keep powder dry because most likely, right, especially for those guys, we got questions on crude, the bigger opportunities on crude, if they come, they will likely present closer to the deal or after the deal rather than in the twilight zone trading before the deal. Or no deal is announced before the announcement. Make sense? Exactly. So yeah, and I guess most people are trying to play for some kind of a disappointment. Yeah. Okay, as we go to the ES, we're still hovering at highs. Not an awful lot is happening. Again, it's a bit of a wait and see. We still have a lot of data points coming out. We have to see what happens here. Very little to write home about here. The other interesting thing, as you see all this wheeling and dealing, you see that gold is in stop hunt mode, right? So, and again, this is another tricky one. As we discussed this morning, you have to understand that the key pain is much further down, right? So any kind of stop that's layered inside this area is just a little bit of a sitting duck. So of course, it may hurt you if you get clipped, but in the bigger scheme of things, it doesn't change absolutely anything, right? So if you're on Twitter posting about every $1 move inside this range, it's probably a fairly good indication that you're not extremely experienced, right? So as long as we're hovering here, it doesn't mean a lot. It's just the basing process. Now, we could easily clip stops and get traction, but for now, it's much to do about nothing, right? And that's something with a lot of people struggle with, especially when we get these slow markets that are trying to consolidate, that are trying to build bottoms, that are trying to build tops. People want to read too much into what's going on. Whereas once we're stuck in these ranges, whether it's a previous day range, whether it's a previous week range, until we get Momo outside the range from a daily close or a weekly close perspective, chances are it's still going to be an awful lot of what we call velocity of move inside range. It is what it is, right? And again, that's the other thing with these sessions. If we'd had today an awful lot of movement, these sessions would have been probably a lot more interesting. We could have talked about a lot more trades, right? But simply it's not moving, and that's the life of a trader, right? As we always say, it's like if you go fishing. It's not because the act of trading is not like the act of fishing in the sense that you're reeling in fish every single second you've dedicated to fishing, right? So you go out on a fishing expedition, you may sit on the side of a lake or wherever you want for 6 hours and not catch anything. Does that mean you weren't fishing? Absolutely not, right? Don't fall in the trap of thinking that trading means that you have to be actively clicking on that button, right? Trading just means that you are ready to allocate capital to, either cash, which is a position, no trade, short or long, right? It's just the mere fact that you are focused in front of your platform, ready to allocate capital should the opportunity arise or should a setup that you deem interesting enough to allocate capital to arise, right? But if you're not physically in a trade, it doesn't mean you're not trading. Of course you're trading. But again, a lot of people struggle with that because, especially if you come from another job, you've given up another profession to trade, everybody's told you you're crazy. Everybody's told you you're not doing anything serious. So being in front of a screen for 6 hours, not taking many trades, you have psychological trouble dealing with it with yourself, realizing, am I really working? Am I, it's not an easy profession. There are a lot of things are counterintuitive. Okay, so let me go through see some questions. A lot of nice comments, but not a lot of questions on trading. Again, nothing's off the table. You can ask me about my putting stroke. You can ask me about my deadlift routine. You can ask me about whatever, any trade setup, capital out, whatever. I don't care. Yeah, sure. That's actually, I missed that. Sorry, I saw you ask that again. That's an interesting question as we let the market move around a little bit. Question is basically on me talking about stocks and sometimes on the feed, do I actively trade stocks? I don't trade stocks actively. I haven't really probably, 206, 208 last time I traded stocks actively. I just don't think it's interesting use of my time. Not only because of capital requirements or efficiency of capital allocation. I just think there's plenty plenty to do on Forex and futures, right? So I'm and because I'm an active trader, I may take a position here and there, but really also in terms of returns, it makes a lot more sense for me to be trading actively. What I will do more actively is I will trade, take structural positions on baskets of ETFs, right? That's some of the stuff we do in the weekly webinars. Is, for example, at the beginning of the year when crude was, the whole energy sector was really sold off hard, we were trying to catch longs on crude, but we're having a little bit of hard time also because, having to hold that positions, having to roll the futures, etc., can be a bit of a pain. So we actually express that view through a basket of ETFs, right? And, we may take a structural view and it may be something that will take 2-3 months to play out, even 6 months, but it's very rare for me to be in one name. I'll probably prefer the ETFs or something, unless it's, I'm long Twitter. I've talked about that but that's going to be 1 or 2 opportunities every year. Okay. Yeah, Colin, in terms of we can answer that. We can do that in the weekly. That's going to remind me. But basically, it's I think in terms of if you're trading actively, the best time zone to be is UK time zone or CET. At least if you're, in my opinion, if you're trading Forex and futures, right? Especially if you're trading, because it just means that you're ideally placed, right? If you're in the States, whether you're East Coast or West Coast, it can be a pain, right? Especially, well, in the West Coast, it's really unfriendly. In the East Coast, it just means that you're going to have some very weird hours. So also family time starts to be a little bit tricky, especially if you want to trade London, right? So UK time zone is really ideal, right? Because you can trade all the European Opens, all the UK Opens, London Open, so EU session, and then you're done with US session, and it's 9 p.m., right? And you can still have dinner and whatever. Of course, some people have dinner at 5. As you can imagine, since I'm trading the close, my dinner will be a little bit later. But it's just, if that's what you do, that's the time zone, right? Especially if you want to have an easier life. You're fairly new. You're trading demo. Where to? Yeah, I mean, if you want to go, I'd say there are a lot of. I would explore the blog, and I would go on the YouTube channel. We've got a lot of videos, and there's a lot of free stuff. So have a look at there, and then if you have any questions, just send me an email. Contact me through the blog loud. But there's a lot of stuff there, a lot of free videos you can go to. It'll take up a lot of time. But Colin, that's the main reason why I'm not trading from the States. Is I would ideally, if I have the choice, I'd much rather be in the Bahamas or in Florida, just to be completely frank. But it's just the time zone is just really tricky with family and everything. If you want to have, it's hard. Yeah, DAX, we looked at DAX this morning, so you can, if you want, look at the previous YouTube video we did. I'll get to it back in a second, but I don't think an awful lot has changed on the DAX, right? Here, let's just go back on it and see if anything's changed. And again, Jan, I would just look back on the video because we discussed the DAX in quite a bit of detail, right? But basically, the summary is we talked about that it's kind of stuck in a holding pattern, right? And that would we think the risk reward is more to the downside rather than the upside. But for us personally, it's not cheap enough to buy and it's not expensive enough to sell. Right? So here what's happening is, again, you see how we're stuck. And if you look at it from a bigger picture, we discussed the fact that it was clearly trying to, in a fairly orderly fashion, break lower. And then we had the smiley face where it based and it broke above. And now it's using this previous resistance as support, right? And now it's kind of blocked. So the issue is it's stuck between here and here. And this is a classical example where, as far as we're concerned, there's a lot of velocity inside range here. Doesn't mean an awful lot. Unless it closes to the up, it needs to get daily, weekly closes above this zone to try and take a rip or to try and take a dip. Right here, we don't feel there's an awful lot of edge. I mean, gun to the head, it looks like ES is ripping for new highs. Here, gun to the head, we'd still be preferably looking for some kind of short opportunities, but it's just very difficult here, right? And to trade tight inside this range, you could get lucky, but Simon, yeah, probably. You could get easily taken out and still be right. I think here, yesterday's close is particularly important. As long as we can't take those out, then chances are it'll still hold a little bit of a bid tone. But if we take those out, then likely it'll start to trade heavy. Bottom line here, what's also tricky in these ranges is that, does it make sense that anybody who's short, really, unless we close above here, they're still short. And even if we rip here and we can't take out this psychological level, I can't remember who mentioned it, right? They're still going to stay stubbornly short, right? If you're long, even if it dips down here, as long as it doesn't really take this out strong, you're still going to stay stubbornly long. I mean, from a bigger term perspective, that's why it's so tricky to adjust your call. There's not much to adjust. Intraday, you might be looking to scalp something, but really it's stuck. And that's the problem, is a lot of people are waiting for the move. They want the move. And, you know, this has been since, what is it, July or something? We've been stuck here. And everybody's getting stubborn. And the shorts are thinking, darn, darn, darn. And the longs are thinking, come on, break, come on, break, come on, break. But really, apart from the fact that the shorts are losing a little bit of momentum and it looks like the longs are slowly trying to get the upper hand, it's still stuck. And it's been stuck here for months. So no matter how hard you look at it, no matter how hard you squint, no matter what time frame you change the chart to, no matter what indicators you start to pile on your chart, it still likely won't change the fact that we're stuck in a range. And unless we break outside of that range, much to do about nothing. Does that make sense? Now, again, don't forget that today's month end, so you get some funky flows going on. So things could get very funky, very whippy. It's difficult to read too much into it. So again, of course, we didn't really pick the best day to do this, but we don't pick birthdays, right? So unfortunately, it is what it is. I think that's a question that a lot of people have asked. The question, I'm more than happy to, if anybody has a comment. The question is, what is the best time zone plus best weather to trade from if you want to trade EU and US session? I would assume that it's because it's around UK time. Just looking at weather and time frame without any other considerations, it's probably going to be hard to beat Portugal. Right? It's probably going to be hard to beat Portugal. Canary Islands was good before the time change. If not, if you're going to any of the other ones, you're going to be on CET. So it's good, but it's not as good. They may like the cold weather. Yeah, I'm sorry. For me, if you say good weather, I assume it's warm. If you like cold, well then, you know, just stay on UK time zone and go up. Exactly. Yeah, so here, you know, as we're going, we still got about, what is it, like 35 minutes to the next round of data. We'll have to see what happens, but again, that's the frustrating thing. Not an awful lot is moving, right? Is just wait and see. That's the problem, right? That's the problem. So here it looks like ES is just trying to go a little bit of a upside pop, trying to clip some stops here, trying to get some upside action. So you see it here, even on the what's happening. We've actually filled this gap. We come in and we just clip upside stops, right? So what you would expect here in terms of action is that into opening flows, if we can hold above this, then there's an extremely high chance that we'll continue to cause as much pain as we can, and it will continue to get traction to the upside, right? On the other hand, if they can't break this higher quick, then the path of least resistance is probably going to be to try and clip all these areas. The overnight low is prime candidate number one to get taken out. And then you'll have to look at these zones. I mean, if you're looking at it, does it make sense that this is that last zone we backed up and then we clipped up that 2190 pretty much, right? So that's something you really should have on your chart, right? We can just up it up. So we got, yeah, 2190, right? So, there you go. So here, remember, we're on Wednesday trade, Tuesday, Monday, Friday, Thursday. So this is Thanksgiving, holiday, Wednesday, Tuesday, Monday. So what happens? We're holding here and we go into the holiday week, right? Holiday week, slow grind, low volume, higher, 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 and lower, lower volumes. And we print a high at the end of the holiday week. Now these highs, it's rare, they usually get tested again, right? They get tested. It's a bit of a dead session at the end of the day on a half day trading, right? So what we've done is we've come into the week, bam, and we've taken that out. Now this is particularly interesting, right? This is particularly interesting because here, if we're going to make a short-term high on the ES, right, and on the dollar, etc., I would expect it to come sometime this week and then correct into the FOMC meeting. So this is particularly nice action. You know, if we start to get decent data, we start to get volumes coming in and this starts to dump, then I would not be as surprised. And we've talked about this before and we've seen it again, right? That the whole holiday move, right? So let's remember we're on Friday, Thanksgiving, Wednesday, Tuesday, Monday, right? So this is what we would call the holiday move. Don't be surprised if this whole ramp gives it back very, very quickly because it doesn't mean an awful lot. Does that make sense? Any comments, any questions? And again, they're labored processes, but you know, you just have to wait for the vols to come back. You have to wait for that data to come back. We have to get for this OPEC whatever deal or no deal to come through. And again, it's again, we've still got to go through more data points, but particularly interesting. And again, don't be surprised, as we said in the first update today also, you know, that we may go looking for, give one more test, another more test at those key inflection points, and then, you know, we'll have to see how it plays out, okay? Good stuff. Okay, so let's see how this goes through these next data points. We've got also the pending home sales, and after the OPEC deal, after pending home sales, after the OPEC deal, we'll do another 30-minute update. Okay, I'll keep the room open, but we'll do another one in a bit. Okay, have an awesome one, guys. Thank you so much.